Oh, there's so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless.
All right, let's talk about something that hits close to home for so many of us. You just shelled out some serious cash for a professional development course, right? And you're thinking, great, this is a business expense. I can write this off. But can you? It's a question that honestly stumps thousands of professionals and entrepreneurs all across Canada every single year. The rules, well, they look simple on the surface, but trust me, the reality is way more complicated. So in this explainer, we are going to dive deep. We're going to demystify the CRA's guidelines on deducting your training expenses so you can finally claim with some real confidence.
I mean, think about it. You've spent your hard-earned money, and just as importantly, your valuable time, on a course or seminar. You're completely convinced it's a legit business expense. But what happens if the Canada Revenue Agency, the CRA, has a different opinion? And that's a scary thought, right? Getting a handle on their specific rules isn't just about ticking a box for compliance. No, it's about protecting your investment and, frankly, avoiding a really painful and potentially expensive audit.
Okay, so here's how we're going to break it all down for you. First, we'll hit the core rule, the whole upgrade versus new skill thing. Then we'll get into what makes something a deductible expense versus a capital one. After that, we'll tackle that tricky personal portion problem. We'll also cover the specific rules for seminars, conventions, and travel. And finally, we'll wrap it all up with your key takeaways. Sound good? Let's get into it.
All right, Section 1, the core rule, upgrade versus new skill. And believe me when I say this is the single most important distinction you need to know. If you get this one concept, you're halfway there. So here it is, the golden rule. This is pretty much straight from the CRA's playbook. Listen closely. Training you take to maintain, update, or upgrade an existing skill is deductible. Simple enough, right? But, and this is a huge but, training to acquire a new skill or a whole new qualification, that is not deductible as a current business expense. The CRA sees that as a capital expense, like a long-term investment in yourself, and it's treated completely differently for taxes. Okay, let's make this crystal clear. Think of it like this. A deductible upgrade, that's like sharpening the axe you already use every day. It's about improving what you already do, keeping you sharp and current in your field. It makes you better, faster, more efficient. Now, a capital expense for a new skill, that's like going out and buying a whole new set of tools for a completely different job, maybe one you haven't even started yet. It gives you a lasting new qualification, maybe even a degree or diploma. It's a fantastic long-term asset for sure, but it's not a current business expense. Now, you might be able to claim it in other ways, like with the tuition tax credit, but you can't just write it off against your business income for the year. All right, theory is one thing, but let's see how this actually works in the real world. Time to dive into some practical, concrete examples to really nail down the difference. 100%. This number, this is the goal, this is what we're aiming for. When your training gets classified as an upgrade, you get to deduct 100% of the costs. We're talking tuition, books, supplies, the whole shebang. It becomes a current business expense, which directly reduces your taxable income. And that, my friends, can save you a significant amount of money come tax time. So what does a 100% deductible upgrade actually look like? Well, let's get specific. First up, any professional development course you have to take to maintain your professional standards or your license. That's a total no-brainer. The CRA is not going to argue with that one. How about a tax course taken by a lawyer or an accountant? Absolutely. Even if tax isn't their main gig, it's so closely related to what they do that it just makes them better at their job. It lets them give better advice. And here's another great one. An architect taking a course on modern sustainable building materials. See, they're not becoming a different kind of professional. They're just upgrading their existing skills to keep up with the times and meet new demands. That's a perfect example of a deductible expense. Okay, now for the other side of the coin. What does the CRA see as a capital expense? Something you can't just write off. Well, let's say you're a family doctor who decides to train to become a heart surgeon. That's not an upgrade, that is a brand new specialization. It's a huge leap. So that's a capital expense. Or imagine a lawyer taking an engineering course just because they're interested in it. It's completely unrelated to their legal practice, right? So, capital expense. And here's a subtle one. A professor who takes a course to learn skills for a new sideline business, like real estate. That expense might belong to the new business, but you can't deduct it from your income as a professor. In all these cases, you can't immediately write off the costs against your current income. Again, you might be able to claim a tuition tax credit, but it's a different process. Okay, let's move on. So you figured out your training is an upgrade, not a new skill. You're feeling good, but hold on, we're not done yet. There's another layer to this onion, the personal portion problem. This is where things can get, well, a little messy. You have to understand, the CRA looks at everything on a case-by-case basis. They're like detectives. First, they're going to analyze the location. Seriously, they'll ask, why did you fly to a resort in the Caribbean for this course when the exact same training was available down the street? You need a good answer for that. Second, they'll look at the duration. Was it a 2-day seminar followed by a 2-week vacation? That's going to raise some eyebrows. And third, they'll analyze the actual activities. They're going to look at your itinerary and your receipts to see if you tacked on a personal holiday. If it looks more like a vacation than work, you're going to have a problem. And this right here, this is the bottom line. You really need to let this sink in. If an equivalent course was available right in your own backyard, your big trip to some exotic location is almost certainly going to be flagged as a personal expense. I'm not kidding. This is one of the biggest red flags for an auditor. You absolutely must have a solid, defensible, business-related reason for the location you chose. If you don't, you can pretty much kiss that travel deduction goodbye.
All right, let's keep going and get even more specific. Let's talk about seminars, conventions, and travel. These are the rules for any training that takes you out of the office, and frankly, this is where a lot of people trip up and make some pretty expensive mistakes. Now, this is a super important distinction you need to make. Are you going to a training course or a convention? Because the CRA treats them differently. A training course is what it sounds like: a classroom setting, formal study, maybe there's even a test or certification at the end. The good news? There's no annual limit on these. If you need 5 of them, you can deduct 5 of them. A convention, though, that's different. That's more like a formal meeting for an organization, a big networking event. And for those, the CRA puts a limit on it. You can only deduct the costs for 2 conventions per year. So yeah, you really need to know which one you're attending.
And just when you think you've got it all figured out, there's the reasonableness test. Check out this quote directly from a CRA interpretation bulletin. The total time taken in attending courses in any one year must not be so great as to interfere with the carrying on of the taxpayer's business. What does that mean? It means your training needs to support your business, not become your business. If you spend half the year in courses and the other half trying to catch up on work, an auditor is going to raise some serious questions about whether those expenses are really about earning income. It all comes down to balance. Okay, this is your practical nuts and bolts guide to travel days. Let's break it down. The actual days you are in the course, yes, of course. Food and lodging are deductible. What about the day you arrive and the day you leave? Yes, the CRA is reasonable about that. They make an exception for travel days. Now, what if there's a weekend sandwiched between training days, like you have sessions on a Friday and the following Monday? Good news, that Saturday and Sunday are also allowed. But, and here's the kicker, any extra personal holiday days? Nope, not a chance. Any days you add on for fun, before or after, where there's no training, those are 100% on your own dime.
Whew, okay. We have covered a ton of ground, so let's boil it all down into your key takeaways. Think of this as your go-to actionable checklist for the next time you're about to book a course.
All right, here it is, your deduction checklist. Before you click buy on any training, just run through these 5 simple questions in your head. Number 1, is this upgrading a skill I already use in my business? Number 2, am I trying to get a whole new degree, diploma, or qualification here? Number 3, is there a big personal element to this, like a resort location or a bunch of extra vacation days? Number 4, are my travel day claims reasonable? Am I trying to sneak in extra personal days? And finally, number 5, is the amount of time I'm taking away from my business actually justifiable? Be honest with yourself. If you can answer these questions and feel good about your answers, you are in a really, really solid position.
So, what does this all boil down to? It means the next time you see a professional development course that looks amazing, you need to pause. Before you do anything else, you need to remember that golden rule we talked about. You have to ask yourself that one single critical question. Is this about sharpening the tools I already have, or am I trying to buy a whole new toolbox for a different job? Your answer to that question is everything. It will guide your decision, and more importantly, it'll help make sure you stay on the right side of the CRA.